Good day, everyone, and welcome to the earnings call of Bhagyanagar India Limited for the quarter ended 30th September 2025. Today's session is designed to provide an overview of the company's performance and address investor queries. Please note that this call is being recorded. Some of the statements made during this call may be forward looking, based on current expectations, and are subject to risks and uncertainties. Actual results may differ materially, and the company does not undertake any obligation to update these statements except as required by law. We encourage all participants to exercise caution and refrain from placing undue reliance on these projections. Joining us today are Mr. Devendra Surana, Managing Director, Mr. Narendra Surana, Founder,
Hello.
Mr. Advait Surana, Business Development Manager, Mr. Surendra Bhutoria, Chief Financial Officer, and Mr. Rahul Surana, Finance Manager. We will now invite the management to present a brief overview of the company's performance. Thank you, and over to you.
Thank you very much. Since the first time I'm making this earnings call, I would like to start with a brief introduction and a background of the company. So this company was started way back in 1982 by my brother and my father, who are the founders of this company. And we have had a continuous run of over 40 years of uninterrupted profits. So for the last 40 years, we have never had any quarter where we have shown losses. We are also very proud of our legacy that in the last 40 years, there has never been any default or delay of payments to any institution, customer, bank, or anybody else from our organization. We are very proud to keep that legacy. Started in the early 80s as a manufacturer of just copper rods, as a plain commodity player. We moved slowly over the last so many years, first from copper rods to making value-added products as required by our customers, and which were basically into auto components, bus bars, switchgear components, and solar water heaters. Over the last 7 years, we have changed our focus and got into backward integration with scrap recycling and import of scrap from all parts of the world. As of today, we have 500 customers, mostly in the OEM sector. Though our focus is mainly in India, we have started made baby steps of exports of some of these products across the world. I would over the last few years, we have been adding more and more value-added products. I would request Advait, who is the Business Development Manager, to talk about the 3 new products which we have introduced in the last 1.5 years.
Hello everyone. I'm Advait, the Business Development Manager. So in the last few years, due to the requirements of our customers, they were pushing us to develop a few more products. One of these products are enameled wires, enamel strips, and transposed conductors. They are used in the application of motor windings and transformer windings. Another product that we have developed is copper in solar applications. As the solar industry is booming, this was something that we have gotten into recently. These products have huge potential due to the electrical requirements of the country growing day by day. And these products also have very high export potential. So we are working on this currently.
Thank you, Advait. As has also been mentioned, because of the legacy issues, this company has a lot of plants and real estate all over the city. So we are going through a process. Also, we also have some windmills which are over 20 years old. So we are currently under a process of restructuring where the entire copper assets will be hived off into a separately listed entity, which should happen in the next 12 months or so. So that restructuring process is also underway, where we will make one company which will be focused totally on copper, and another company which will have windmills, real estate, and other assets of the company. So that is also underway. As regards the future, we are personally very bullish on the growth of copper. Copper in the last few years has been growing by leaps and bounds. In a country like India, typically the growth of copper is twice the rate of GDP. So if the GDP is at 7%, copper growth is between 14 and 15% every year. The main drivers for the growth of copper are three buzzwords today in the industry. Number one is green energy. Green energy, both solar and wind, require about 3.5 times more copper compared to traditional forms of power generation. Because it is decentralized generation of power, there is much more requirement of copper parts in both transformers, cables, and other places. This is leading into a great boom for copper. The second growth engine for copper is EVs. Electrical vehicles also require roughly about 4 times more copper per car compared to a regular IC engine, including in the setting up of the infrastructure for charging and others. The third buzzword today is AI. And AI is going to really increase the demand of power and thereby increases the demand of copper. There is a estimation that AI will consume more than 10% of the world's requirement of power, which will straight away translate into additional 10% requirement of copper for powering this AI growth. Seeing this major growth in copper requirements across various industries, we are also gearing up to meet the challenges and the opportunities which are going to be presented in the coming years. As we move forward, the other challenge which is going to happen is that there is not enough copper which is to be mined on the earth. So recycling is going to play a much more important role for the fulfillment of the copper requirements of the country. And we are well placed to take advantage of this, as we have been doing this for a long time. We have the technology as well as the resources required for taking advantage of this coming boom in the recycling industry. Further, recycling is also being given a lot of weightage by all customers in terms of the ESG requirement, as well as the government is coming up with a proposal of EPR, which is extended producer responsibility, which will ensure that more and more producers will use recycled products in the future. We are also looking at opportunities since we import all this scrap from all over the world. We are looking also at opportunities of getting into recycling of plastic and lead in the near future. Furthermore, we have an aspirational target to reach 5,000 crores turnover in the next 7 to 8 years with this in this product line. We already have a 60-acre facility for copper, which is more than enough to reach this turnover as far as the land requirements are there. So one of the major constraints is already off the block. Now, coming to this quarter and this half year, I'll just give a brief summary of the half year results. From the last year's 777 crores, we have reached 1,065 crores in the first half year of this year. Our EBITDA has gone up from 14 crores 83 lakhs to 41 crores 39 lakhs, which is almost a doubling from 1.92% to 3.88%. This has happened mainly due to our focus on more value-added products rather than commodity sales. The PAT, in the meanwhile, has also gone up from 7 crores to 25 crores. Thank you very much. Looking forward to some questions. The presentation has already been uploaded. I'm sure most of you have seen it and will be happy to answer any questions which are there.
Thank you for the detailed and insightful briefing. I now request attendees who wish to ask a question to please raise their hands so we can take questions one by one. The first question will take from Mr. Agastya Dave.
Hello, am I audible?
Yeah.
Thank you very much, sir. First of all, for holding the con call. It's been very tough getting in touch with you. although I've not like tried extremely hard, but still, sir, I appreciate an open con call like this from every company. Congratulations on great performance, sir. Sir, I've been following this company for a very long time, and if I just look at the data for the last 3 years, your volumes that you report in your annual reports, they have been declining, whereas your EBITDA margins have been increasing, which I understand is the value addition part. But can you go into further details? Even in this quarter, the EBITDA percentage and the gross margins have jumped quite significantly. So was there an element of inventory gains here? Because copper corrected last year and then has surged over the last 3 months. And then my question is on the sustainability of this. So if you can give some kind of a breakup between how much is coming from value addition, how much was inventory gains, how much was some other factor which led to such improved margins. And going forward, how do you see these panning out? What is the upper level up to which you can go?
Thank you, Agastya, for your interest in the company. Yes, our EBITDA margin has gone up, and it's primarily due to our focus on more value-added products. However, as you have rightly pointed out, the copper prices go up, while inventory gains has not substantially is contributed to the gains. But what happens is whenever there is an uptrend in the commodity prices, the
Hmm.
overall sector goes up, and there is a much more bullishness. When the price
Right,
comes down, the customers tend to not buy and delay the purchases. And as the
right.
prices keep going up, there is a surge in demand from the end customers who want to buy, and that's how there is a slight increase in the EBITDA margin because of that. But the majority of the price gain has happened because of our shift to higher value added products, and a certain small amount of value gain also has come in because the customs duty on copper scrap has been removed from January 31st of this year in the budget last year. So our imports have suffered a lower customs duty. Part of that saving has been added into our EBITDA margin.
So will that sustain this saving in the customs duty?
The customs duty is gone forever. So
Hmm.
therefore, that EBITDA margin can continue. We are
Hmm.
looking at sustaining our EBITDA margin at close to 4% over the next few years.
Okay.
Um, in spite of the higher prices and higher volume, our target is to sustain our EBITDA margin close to 4%, plus or minus
Okay.
quarter percent over the next few years.
Okay. And so in terms of volume growth, as far as I know, sir, you have a 30,000 ton capacity. And I believe the last year's numbers, please correct me if I'm wrong, were 18,300 tons. So
Yes.
you have some room to grow. So what kind of volume growth did you see in first half, and how do you expect the next 2 years to pan out?
So the volume growth in the first half. I'll just give you the volume growth in the first half. So what happens is because of the various value-added products, while our overall capacity is 30,000 tons, which includes both the commodity as well as the finished products. So the volume in metric tons of the first half has been 12,400 metric tons as against 8,955 metric tons in the previous year. So there
8,000,
has
sir, how
been
much? 8,000?
8,955 in the previous half year.
Okay. 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 So that's a
So
substantial jump, sir. Okay.
yeah, there is a substantial jump in the volume,
Right.
and sometimes the volume growth doesn't fully reflect the correct picture because
Right.
whenever there is an arbitrage opportunity in the commodity sector, we increase our commodity sales not only
Hmm.
to test our capacity but also to take advantage of the situation. And whenever there is a situation, and that happens especially when the prices are going up, like you said, when the prices go up, there is an
Hmm.
arbitrage opportunity between India and China and other places where we buy
Right.
the local scrap in India and then export the ingot to China. So that is sometimes a seasonal game. The
Right.
commodity volume will be a little volatile, whereas the
Hmm.
OEM sales are very, very constant.
Great, sir. One last question before I go back in the queue, sir. In terms of next round of Capex, when do you see that happening? Because you were mentioning that you're targeting a much larger volumes, but can you quantify that in terms of tonnage? And the next round of Capex beyond this 30,000 ton capacity, what are you planning?
So immediately we are looking at only an additional 5,000 tons in terms of the overall capacity. Our
Okay.
majority of the capex right now will be going into adding more value-added products and increasing the capacity of the value-added products.
Okay. So how much is the value-added portion as of now in terms of capacity and production?
Roughly about 60% of our sales is in value-added products, and the capacity is almost fully utilized in terms of the value-added products. So we are increasing the
Okay.
capacity there so that we can reach up to 75% of the volume in terms of value-added products. And our investment in the first phase is going in that, and it's a continuous process. Like Advait said, our demand for value-added products is driven by our customers. And whenever
Right.
the customer wants any new form of value-added product in copper, we do the required investment for them and get into that business. So that's how.
And EBITDA margin for VA would be, I mean, value addition would be what, 6%, 7%? Beyond that, how much would that be, sir?
So
Can you
it
give?
depends on the product because depending on the various inputs which go into the value-added products, could be
Right.
anywhere between 6 to 12%, depending on various different types of products which come in.
And commodity is at 2%.
A commodity is typically at around 2%, 2.5%.
Understood. So, thank you very much for answering all the questions. Thank you, sir. All the best.
Thank you very much.
Thank you. We'll now take the next question from Mr. Darshil Javeri.
Hello. Hi. Good evening, team. Thank you so much for taking my question. Hopefully, I'm audible. Hello.
Yeah, wait for your question.
Yeah. Hi, sir. Just wanted to know, we've given a very ambitious target of, I think, reaching 5,000 crores, over the next 7 to 8 years. But in the short term, what would be, our growth targets like? Because as we are seeing, there are a lot of drivers to the industry, right? So, yeah, currently, like, how would you see it for the, next, maybe this year and next year, how would we, scale up?
Okay, if for the near term, we are hoping to at least replicate the first half in the second half for this year. And going forward, we are looking at roughly about 20% growth every year, year on year, compounded. Like I said, the demand of copper is roughly double the demand of double the growth in GDP. So we expect the Indian demand of copper to grow at roughly about 12 to 14% every year. And we want to have a something more than that. And we are looking at roughly about 20% growth every year. And we see a lot of traction from all our customers. So all the customers whom we talk to are looking at increasing capacity by 40 to 50% every year. And majority of our growth is driven by our customers.
Uh, correct, sir. So, sir, just it's the first time I'm seeing the company, so pardon me if my stuff questions are basic. So, the we supply to people who are doing more capex, or is it the regular need that they have? So, the reason I'm asking this question is so when they are doing some new plant or factory or some other capex, that's when our products are needed more, or do we supply them on regular basis, like?
So most of our customers are very, very regular customers, and month on month we supply the same customers the material. Especially when you are looking at transformer companies, when you are looking at auto companies and switchgear companies. So most of our customers are manufacturing capital goods. But the same customers take the material from us and then supply to the entire market.
Oh, okay,
Panel
okay.
builders, transformers, and automotive. The customers are same. They are all repeat customers. We hardly ever get any new customers.
Okay, fair enough, sir. So, sir, is there then like some kind of seasonality in our business, like, H1's better or H2's better? Because September we've, done very well in terms both of our revenue and margins. So, just wanted to know, like, is this, that the September quarter is the highest quarter, or, we can expect this quarterly run rate to, be the new base for us?
So we are hoping to maintain this quarterly run rate through this year and then start increasing more from the next year. Typically, the first quarter is a little slow. The other three quarters are equally good.
Okay. That's
Nothing seasonal in terms of the season, but sometimes, the March end will play a little bit of demand extra in March, but nothing major seasonal.
Oh, okay. That's really helpful, sir. And sir, we saw that your value added is nearly 60% right now, and we want to go into more products, something related to solar and everything. So those margins will be even better than the value added currently we're doing 6-7%, or how would those be, sir? The margins of the new product that we are trying to explore.
So, like I said, margins in OEMs range between 6 and 12%. So we are looking at all the entire range of value-added products across the various sectors. So even if you look at something like a transformer winding, even in that there will be a variation between them between 6 and 10%. But roughly the range is between 6 and 12% for the value-added products.
Because that's a very big range, sir. Because 6 to 12 would, if we could narrow it down a bit on an average rate, because uh, we are right now doing 4%. I don't expect us to reach 10% overnight, but we hope that that's the endeavor. But still, just wanted to get your feel that in general what the value added products are doing right now, and what will it be during the future, sir.
So we are not targeting aggressively over 4% on a total value addition. We are quite happy with maintaining 4% and maybe look at getting it slowly upwards in small decimal points to 4.5 or so. We are definitely not targeting more than 5%. 5% value added in the next 2 years or so. The overall value addition will remain, EBITDA margin will remain between 4 and 4.5.
Oh, okay, fair enough. Just last question from my end, sir. We were talking that we have some real estate assets. So, what would be its current market value? Do we have any idea, sir, about that, sir?
We look at adding construction. So the circle rate of that will be around 200 to 250 crores. We haven't taken out the exact figure, but once we do this restructuring, we might be doing some development work and also adding value in that in a separately in the company.
Okay, so we look to become kind of like a construction company out there. Like we'll be
Yeah,
like
either we do a
residential.
construction. That's right.
Oh,
Give it a
okay.
development maybe.
Okay. That helps a lot. I have some more questions, but I'll just join back in the queue. Yeah. Thank you so much.
Thank you very much, Dash.
Thank you. We'll take the next question from Mr. Mayur.
Hi, hello everyone. Am I audible?
Yeah.
All right. Thank you so much, firstly, for allowing me to speak over here, and congratulations on the stellar results. Uh, I just had one concern or one question rather. Uh, because everyone is now saying copper is going to be the new silver in the market overall, all across the world, how does the company plan to handle all the market fluctuations that are happening month on month or quarter, especially what we have seen this year at least? How do you see the company handling all the market fluctuations?
So we hedge our positions on all the three exchanges: Comex, LME, and MCX. And depending on whatever the situation, we try to ensure that we are not very much exposed to the market forces. But given that we are quoting in tenders, giving to OEMs, there is a little bit of overflow which we can come to us, but it is typically a second level ripple effect which affects the company. The first level effect is typically hedged on the exchanges.
Okay, understood. Thank you so
Also,
much.
just since we are on this question, would like to make it very clear that in copper, the purchase prices and the sale prices are continuously adjusted. So there is the price of copper is always put LME plus so and so. So whenever we purchase and sell, the automatic pass-through mechanism is there both in our purchases as well as in our sales. And we really don't have long-term contracts of sales over 3 months or 6 months like that on a fixed price.
Okay, sir. Understood. Thank you so much for answering that.
Welcome.
Thank you. We have one question in the Q&A tab as well. I'm just reading out the question. How will you manage with increasing raw metal prices?
So the increasing raw material prices, like I said, is a straight away pass through to the customer. However, it does have a second level effect that it increases our working capital requirements in the company, as we need to provide for the finances for the working capital. Other than that, it is a direct pass through. Whatever the prices of raw material go up are increased in our sales prices.
Thank you. We'll take the next question from Mr. Pratik.
Yeah, hello, sir. This is the first time I'm actually joining the call. Again, thank you for conducting this, if I'm right, first ever con call. So please continue to do that with the investors
Thank you.
after what the results. So, sir, I'm just learning a little bit more about the company. So I do have a few questions. Can you talk a bit about your customer segmentation, customer cohort? Like, are you supplying mostly to private sector, or is it mostly for like B2G government sector? And then my question was more around the receivables, sir. Sir, are we doing anything? I see our receivables pretty high. Are we doing something to improve the operating cash flow situation?
So we have hardly any presence in the government. Most of our sales are B2B sales to OEMs, and we have a slightly higher concentration towards South India. And these are all long-term OEMs. For some of these customers, we have been supplying for about for 35 years. Every month, we supply month on month. And the receivables typically are from OEM customers are from 15 days to 60 days, whereas the commodity is typically 0 to 7 days. And as our focus goes more towards OEMs, our receivable days will keep going up. And over the last few years, we've had a very good track record in terms of receivables and almost zero write-offs on an annual basis. It's less than 0.1% every year. So that's been our record in terms of the receivables and getting the money.
Got it. So, sir, my second question then follow-up is on the Capex plan. So you
Yeah.
said that the second half we are doing the Capex.
Yeah.
What would be, how are we funding this? Is it through internal accruals? Are we going to raise through the market, or is it through loans? Can you, and then can you talk a bit more about the Capex in terms of, when will it go live, and how do you see the operational efficiency going up?
So, so far, all our capex over the last few years, in fact, from 2014, we were at around 300 crores, and now this year we are targeting 2,000 crores, are through internal accruals. So far, all our capex has been through internal accruals and very minor amount of loans from the banks. We are looking at some fundraising in the near future, especially when we are looking at the new plans of plastic and lead recycling. So we will be looking at some raising of funds for that.
Got it. And can you talk a bit more about the cycle for this? Like, when is this going to come live? Can you talk a bit more about the plan there? And how will the capacity utilization? How do you see?
Sorry, can you repeat those questions? I didn't get that again.
Yeah. So my question again was on this new recycling plant which you are talking about, sir. So when is this coming live, and how would the capacity utilization do you see initially, and then when do you see it can reach full capacity utilization? And is this also margin accretive
So we'll be doing it probably in three phases. The continuous growth in our value-added products continues on literally on a month-on-month basis. It's a rolling effort. As far as our plastic recycling is concerned, we are looking at getting it live in the first quarter of next year. The lead recycling is still on the drawing boards. We are still making the total detailed working. We are not we are expecting that to come only by end of FY27.
Got it. So, and this is going to be within this entity, right? Within this copper entity, not the.
This is going to be within the copper entity, and post demerger also it will remain in the copper entity. Copper entity will become a much more, in a broader sense, a recycling entity.
Okay. And any business reason behind that, since we are seeing that the copper prices are going up and you are direct beneficiary for that. So now sort of getting into adjoining business of recycling for plastic and lead as well. So can you can you throw more light on the
So
business?
when we import copper scrap, we basically import it in the form of cables. So already we handle roughly about 600 to 700 tons of plastics, which comes as part of the copper scrap which we import. And we are already doing a small way plastic recycling in terms of molding and making granules, but we wanted to become a much more full-fledged area, so that the entire plastic which comes in the cable scrap which we import is converted into finished products. So that is the reason we are getting into plastic, and that's why we are thinking we are doing this on the first basis. Secondly, all the sourcing for copper scrap is international, and the same sources we get all the other raw materials like lead and other things. So we are seeing a good opportunity in that area, and we have a big infrastructure in terms of the land and the pollution norms and other things set up. So it makes a lot of sense to get into other recycling like lead. We were thinking of lead in the first phase, and maybe in 3 or 4 years getting into aluminum as well.
Got it. And these businesses are margin accretive?
This is a margin accretive. Copper, being the highest value, has the lowest margin in terms of percentages. The lower value products will always have a higher EBITDA margin per se.
Okay. Thank you. Thank you very much, sir.
Thank you. We'll take the next question from Mr. Agastya Dave.
Thank you very much, sir. I wanted to ask about the Capex, which you have answered. Except one thing, how much will be the Capex for this year? Can you quantify the actual amount of Capex that you will be doing?
So for this financial year, we will be doing roughly about 15 crores of Capex, that is FY26. And we are targeting 30 crores for FY27.
And sir, how much of this 45 crores goes into the 5,000 ton expansion in the copper, and how much goes for plastic?
Um,
A rough number would do, sir.
Yeah, the plastics will be roughly about 3 crores. The Capex growth will also be hardly about 7 or 8 crores. The majority of the Capex is going in adding value-added products.
Perfect, sir. Sir, the question on the working capital side, I would like to repeat that because I've seen this. I don't know whether it should be called a problem for you or not, but whenever copper actually picks up in prices, your working capital historically has exploded. So even now, if I do like just normal projections, I see that number exploding. So what is the maximum level of debt do you think you guys are comfortable with at the current equity base? And how much you mentioned about raising capital? So how much equity are you considering to raise?
So we are looking at the market and we are talking to investment bankers. So the ballpark figure is between 100 and 150 crores of equity raise. And what we are looking at is, at the current capital, you rightly said our current debt is optimal. Anything more will require further equity raise.
So internally, what is the level you're comfortable with? 1:1 debt equity? Or you can
So,
go beyond it?
so because it is mainly working capital,
Hmm.
we can go up to 1:2. Because the
Okay.
long-term loans are hardly going to be a maximum of 20 crores, which is like
Right.
0.1:1. The long-term
Right.
debt is always going to be very low. It is only working
Right.
capital which is backed with both stocks and
Inventory.
debtors.
Yeah. And risk.
So we are
Yeah.
comfortable with 2:1.
And so what's the rate at which you get these loans, the short-term loans?
Typically less than
Since
9%.
Okay. Still quite high, sir, because most of it is backed by copper, right?
Yeah. So I'm saying less than 9%. If you see
Okay.
the marginal cost of debt is about 7.75%. But if we add all the, upfront payments and other things,
Uh-huh.
I'm saying it is less than 9.
Understood, sir. Understood. Okay. And so you mentioned the receivable days for value-added products. So net on an ROE basis is value addition still beneficial for the company? Because the working capital requirements are pretty high.
Yes, but that is where the value is for the company. Because we make this value-added company products, that is
Okay.
where the value accretion happens for the company. Otherwise, our EBITDA margin, like until it was 1.5, 2 years back, EBITDA margin
Right.
remains very low unless we get into value-added products.
One final question, sir. Any further consideration you're giving for more forward integration? The backward integration, you're pretty much like at what you can do, right? You can't go beyond that. But on the forward integration side, sir, what are the plans, if any?
So we are looking at a few more products, like we were saying, we'll be doing solar
Right.
wires.
Right.
And we are talking to making more components for our existing companies where we are making water heaters and other things. So we are looking at some more products like that. But again, we are not looking at any product which really go directly to the customer, because we
Okay.
find that B2B is where our strength lies.
But can you get into some sub-assemblies like the windings that you can go like probably do sub-assembly for the transformer guys? Is that a possibility, sir? Does it make sense?
So we do such things for auto companies where we make the windings for the auto companies, and depending on where the customer requirements are and where his pain points are, we always
Right.
move towards that. We make some components for switchgear companies where we can do bus bar. After making the bus bar, we add value and give it in a form of a component. Those are the things which we are also looking at.
Great, sir. So thank you very much for the opportunity, and I really appreciate the con call, sir. Thank you very much, sir.
Thank you.
All the best.
Thank you.
Thank you. Now we'll take the next question from Mr. Darshil.
Yeah, Darshil, we can.
Mr. Darshil, are you there?
I think he must have walked.
Okay. We'll take the next question from Mr. Arjun.
Hello. Good afternoon, sir. Thank you for this opportunity. So my first question is with respect to the capacity expansion. So, we were around at somewhere 25,000 in 2017, and it took us more than 5 years to reach us at the 30,000 level. And now we are adding capacity by another 5,000. So I want to understand from the demand perspective, like what has driven this demand? Is it because of the product shift that we are now focusing more on value-added products?
So the demand is mainly because of the growth in the economy. So things like our bus bars and other things, there is much more growth in the economy, and there's much more demand which is coming from the market around us. That is what is driving our growth in production. The value addition is what we are adding to ensure that we get a higher part of the pie. But the demand is basically one, as a country, we are becoming more competitive, so we are able to export. Number two, each and every customer of ours is expanding. That is what is growing, making the demand.
Got it, sir. And out of this additional 5,000 capacity, what capacity will be for value-added products?
So we have a lot of flexibility. When we want to make value-added products, first we have to make the commodity and then convert it into value-added products. So when I'm saying 30,000 to 35,000 tons, that is increase in the capacity for the value-added products, for the commodity. Whereas the value-added products, we do incrementally on literally quarter by quarter, depending on where we see the growth coming, which sector, whether it is automotive, switchgear, transformers, solar, wherever the growth is coming, we keep adding capacities to increase our value-added products to cater to those sectors.
Okay. And right now, what sector is you can see demand for value-added products from which end user industry?
So mainly from the electrical sector, the transformer sector is the biggest growth, and the second is the green energy.
Okay. And what percentage of value-added products versus commodity in the revenue mix we can see 2 to 3 years down the line?
So right now we are at 60%. We are hoping to reach 70% in the next 3 years.
Okay. Okay. That's it from my side, sir. Thank you so much.
Thank you.
Thank you. Do we have any other question from any other attendee? You may please raise your hand now. Thank you everyone for such an engaging session. I now request the management to share their closing remarks.
You want to say something? Thank you once again. I thank all the participants who have come and taken interest in our company. And hopefully we will keep this tradition going forward with every quarter. I would like to thank FinPortal also for organizing this meeting for us and getting the interest into the company. We are also looking forward to a lot of growth in the next few years, especially with the restructuring coming up ahead. And when we'll focus totally on the copper segment of our company, we hope to keep in touch with all of you for in our journey forward. Thank you very much.
Thank you, sir. On behalf of Bhagyanagar India Limited, I would now like to thank all participants for joining today. Have a great day ahead. You may now disconnect.
Thank you.